everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology of the moves today so that we can better understand tomorrow. And today we're going to be taking a look at crude oil. Now, today is inventory day. We had inventories come out at 11 o'clock because Monday was the holiday, so it was a little bit later. It's kind of nice when that happens for us crude traders because then we don't have to really worry about the morning session as much. But all things considered, we really didn't get a whole lot going today. Yesterday, we had that big up and down that we saw, big run higher and then a big drop right back down. And then we open up today pretty much smack inside of all of that. And that's always a little bit of a concern because, well, that just shows us that we're probably in a range, right? We need to be looking to buy low and sell high and try to stay out of the middle as much as possible. And when we opened up, they tried getting a drive lower. We found major support off of the earlier breakout area that we gapped above. And when we started coming back higher again, we had the second candle of the day showing bears, but terrible follow through. The bears couldn't get anything going before the fourth candle of the day showing the buyers swooping in and saying, all right, well, if the sellers don't want it, the buyers do. And they tried pushing it the opposite direction. That's a nice reversal type trade to keep the movement going, assuming that at this point in time, remember, we can't see all of this, but at this point in time, we're looking to potentially try to go back up into the earlier cluster area up here. That's the last time that we found a lot of inventory, and there's a good chance that if we broke out of that, the market may want to come back to it to see if the sellers, in this case, because the drive down, if they want to defend that location. So looking for a long here makes a lot of sense to drive the market up, and it caught a really nice lift towards the upside. We saw some profit taking and a pullback, lots of inventory forming at the highs showing that, well, although the buyers may want to come in, they're not exactly proving a whole lot, and at this point in time, the buyers are likely just going to be buying in more if it pulls back further. Understanding the fact that if there were buyers, let's say they bought on the high of bar 4, or maybe they bought 5 or 6 or 7, they bought the whole way up, their stops are probably going to be under the first candle of the day. And as long as that doesn't trigger, that's a big clue. The market tried pushing down and it came one tick away from the low. And that's where things get really interesting because it missed that low. The buyers bought into this aggressively, and we know that because if we look at the candle itself, notice how there's no wick on the bottom. That's a big clue because there's no wick on the bottom. That means that as soon as that candle opened, the buyers hit it, right? And when the buyers are slamming into a market like that after such a huge drop lower, now, since they missed the low by one tick, the buyers are still in with their stop underneath that low, and the buyers are now showing even more aggression to defend that position. We can definitely tell that the buyers want this to go back up. And since we missed that low, we're expecting them to break out through the highs, probably not by much. It might go through it by, 5-10 ticks or so, and then begin looking to fade back down. And that is exactly what happened. That's a beautiful buy opportunity to go back to the highs, fade the highs once we get up there, and then look for a selling opportunity back down. And, well, we got it right there, right? We form a huge amount of inventory up here. That's likely just due to the fact that the buyers, well, they got out. They missed their stop by one tick. They liquidated the position when it hit the highs, and we found a bunch of range and inventory. The sellers came in on the 24th candle, shutting down all of the buy attempts, and on bar 25, well, that kind of shows you what happened, right? A pretty big drive lower, I think, to say the least. So with that drive down, that showed that the sellers took firm control, and now, all in one candle, we went from the high down to the low. And whenever that happens, that's more of an exhaustive type candle. It did too much too fast. It's the same thing that happened on the 13th candle over here. It's not allowing traders to get in on board with that big drive down. And, well, when that happens, you usually find the opposite. They go against it. They went too far, right down to the bottom of the range. We broke through the low a day, and buyers begin scaling into it for a quick attempted pop higher. And you can see we're still stuck right in that area. There's a good chance that buyers are trying to buy, assuming it's a range, and they're looking for a fade move right back up again. So really awesome day in terms of just the overall momentum of the psychology that took place today. Opening up right in the middle of the range, showing that it's a possible range move, kind of depends on what they want to do here, but they were proving it on the fourth candle of the day, and then when we had bar 13 fail to break that low and 14 following through with the upside, that really put the nail in the coffin on what was going to happen and played it like a fiddle. So great day today on crude oil and really awesome price action when you're talking about the psychological aspect. As always, if you have any questions, feel free to send me an email, jbrink@slingshotfutures.com. Hopefully you found it useful, hopefully you found it interesting, and we'll see you tomorrow.